What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we tested critical support and so far we are seeing buyers at that level. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also, please don't forget to smash that like button and help these videos reach 2,000 likes. Alright, today in SPY we were up 0.31% and intraday we did test that very critical support level which I told you last night was going to be right around 389 to about 393, and as you can tell that was a critical support zone and we did have buyers at that level. So we did have a nice bullish hammer candle today, which means buyers were stepping in near support and we did get the bullish close above 393. So when you're getting buyers at a support level, you instantly need to start thinking about the possibility the market is ready to pivot and the knife is no longer falling. So use this extremely critical support level right around 393 to manage a risk from. And from here, it is possible that we do start to bounce and at least test this 50 daily moving average at 400. Now, obviously, I always tell you manage a risk, which means if we start losing this support, you instantly need to get more risk off. But while we are below 416, I do suggest using this risk level right around 393. If we lose 393, you'll be looking for this support trend line, which is going to be right around 390. And keep in mind, it is a positive slope, so it will continue to rise each and every day. Now, if we lose this critical support, it is very likely that we will go very quickly to fill the gap right around 378. So do keep that in mind that it is going to continue to be a falling knife if we lose support. On a break back over 400, we'll be looking for a retest of the resistance trend line, which is going to be anywhere between about 409 and 411. So keep in mind, we could see a strong bounce to the upside if we can get back over this 50 daily moving average. Also pay attention, the volume was starting to increase today on a green day, so that is definitely a bullish indication that buyers were at that level and we didn't just see a super low volume buying day. So if we see continuation of the buying at this level, that could turn into something more. But overall, we are still making lower highs and lower lows in the short term until we can break back over our resistance trend line. In the Nasdaq 100 triple Qs, we were up 0.04%, so we basically went absolutely nowhere. But if you were watching the intraday price action, it was a very volatile day. Intraday, we got way below the lower Bollinger Band, right around 293, and it did look like at some point the bears were taking control below 296. But buyers stepped in on increasing volume and closed all the way back over that critical support. So the triple Qs bulls can now set their risk at 296, but do keep in mind it's still a falling knife if we lose that support, so you're instantly getting risk off on a break below 296 with the next downside support all the way down there at 287. To the upside, we'll need to break back over the support trend line, which is now going to be resistance right around 301, and then we have the 50 daily moving average right around 305. Back over the 50 daily moving average, look for a retest of 314, and back over 314 it will look like a bullish breakout. On the Dow Jones, we were up 0.45%. Again, just like SPY and the triple Qs, we saw buyers below support and close back over 315. So far the Dow Jones is holding that level. You're instantly getting risk off below 315 for the gap fill just below 307. And if we continue to bounce off support, the next resistance will be up here right around 322. The Russell 2000 IWM ETF was down 1.09%, breaking below the support at 183 and likely coming down to retest the next support at 178. But as you can tell, the Bollinger Bands were not allowing for that, so they will need to expand. There is a gap to fill to the upside at 183, and that's also going to be resistance. So you're not getting bullish on the small caps until they can get back over 183, because it's still possible they're trying to come down here to 178. The ARKK ETF was down 0.38%, and ARKK had a very nice bounce off that support at $40, but is still below the resistance trend line, which means you cannot get bullish until we start breaking back over 43. Back over 43, we could get more bullish for the potential of the gap for that 47, but you will also have resistance just below 46. If we fail to hold support at $40, look for the next leg lower at 36.5. The VIX was down 1.2%, so we did see the VIX getting crushed as it was trying to break out above 27, but we cannot say the VIX is crushing in a bullish manner until it closes below 24. On the VIX crush below 24, it'll likely fill the gap at 21, and that will give legs for some bulls to push higher. Overall, it's still a volatile market while the VIX is above 24, so stay cautious and always make sure you're managing your risk. On Bitcoin, we're currently flat, going absolutely nowhere, and Bitcoin is trying to hold this level right around 20,000, and so far Bitcoin is not getting sold off down to 19,000. So overall, if you zoom out, you can see that is going to be the critical risk level. So Bitcoin is still in a downtrend of lower highs and lower lows with a high probability that it wants to test that support, but we never know anything for sure, so there's still the possibility this support right around 19,500 can hold up. The bull breakout isn't until we get back over 21,600, so I would be patient here and respect the range between 19,000 and 21,600. On Amazon, we were up 0.83%, and Amazon was very close to fully closing the gap, but there is no guarantee that we have to fully close that gap. But we did find buyers before the gap filled, so be aware that the gap is still open and doesn't fully close until Amazon gets to 122.84. We're back over this support right around 125.7, so if you're trying to get bullish in Amazon, you can try to get bullish at this risk level, but do keep in mind that gap is just below. The next breakout for the bulls will be this break above 128, and then we could try to run all the way back up to about 136, and that is going to be the strong resistance. Microsoft was down 0.41%, so we continue to see Microsoft behaving weak, and that is exactly what we should expect while it's below 267. It's a falling knife until we get back over 267 to 269, and if we continue lower, there's still the possibility we come down to about 252. If we break over resistance, we can get more bullish with the strong resistance up there right around 274. Nvidia got absolutely hammered today, going down 7.67% and closing at a brand new 52-week low and way below the lower Bollinger Band. So the question is this overdone or is Nvidia going lower? It has a huge gap to fill to the upside at 149 with resistance right around 145. This is obviously an extremely volatile sell-off, so it is extremely risk-off below 145. So you will want to be patient and let this thing level out, and then you can start looking for the possibility of that gap fill at 149. Without a doubt, this is lower lows and lower highs and now 52-week lows, so it's risk-off until we can find some type of support, and then we can manage our risk around that level. The low of the day was right around 133, so if you want to pay attention to that level, it is possible we could see a retest before we go any higher, or we're going to see a very quick recovery because the selling is overdone. On Tesla stock, we were up 0.56%, and Tesla is holding support just above the 50 daily moving average, but as you can tell, the Bollinger Bands are expanding, which could allow this double top in Tesla to get down to the price target to fill the gap at 250. So for that reason, Tesla is risk off below 283 unless you want to set your risk at the 50 daily moving average at 270. Below 270, you instantly need to expect more downside with the next downside price targets at 258 and the gap fill at 250. You can get more bullish above 283, but try not to be bullish while we're below that breakdown because this is a confirmed double top. In Apple stock, we were up 0.47%, and Apple is holding support above the 50 daily moving average, so you can set your risk at 156 and stay long while we're above that level. If we break below 156, it's likely we're coming down to 151, and if we bounce off 156, it is likely that we're going to fill that gap at 163.56. Look for resistance also at 163, so don't just assume the gap has to get filled, but it will be getting a lot more bullish if we can get above that gap fill. The financial sector was up 0.3%, holding support at the 50 daily moving average, but overall still in a short-term downtrend, so be risk off if it's below 33. The industrials were up 0.14%, finding support at the 50 daily moving average, but still in a short-term downtrend, so you can use the risk level right around 92.6 and get risk off below that level. The healthcare sector was up 1.64%, and we did see a very nice bounce just below that right shoulder, so you can be more risk on in the healthcare sector while it's above 126, but you instantly need to get risk off if we lose that as support, and it will be bullish if we can build out this right shoulder and get this large inverse head and shoulders on the daily chart. The energy sector was down 2.46%, coming all the way back down to the support right around $78 and closing just below the 20 simple moving average. Keep in mind you can stay risk on while we're below the support trendline, but you need to get risk off if that support level fails because this could be a lower high before the next lower low, and we do have a gap to fill all the way down there at $69. So jumping back over to the S&P 500, without a doubt the bulls and buyers stepped in at this very critical support, but one day is not enough to say that the selling is over, so you still need to manage your risk very tightly right around this zone between 390 and 393, and just keep in mind it's okay to take on risk at this level, but you instantly need to get risk off if the level fails. So the risk reward ratio is getting better for the bulls the closer we get to this critical support, but that doesn't guarantee that the support level has to hold up, and we are still respecting the short-term downtrend. If you're looking for more help becoming a better price action trader, consider joining the Stocks Channel Trading Discord community where you get all of my intraday updates and analysis. If you want to join us in the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of this video. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking for more info about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.